welcome everybody. We're going to be doing another presentation about topping up your state pension, how you do it from overseas so that you can make sure you don't lose out on your entitlement. It's a great thing for any British expat to do, or even if you're not a British expat, but you worked in the UK for a number of years and you pay some national insurance, this is something that you're entitled to. Now, we have got, I think, well over 100 people attending the session tonight. These sessions are very, very popular at the moment because state pension is something that is a very trending topic. There's been some news and updates and things like that relating to rules on backdating the state pension, which we're going to cover in this webinar. So we'll do that in due course. Usually we take about 30 minutes or so to go through the slides, and then I'll do the Q&A at the end. But I will keep an eye on the Q&A session, in the Q&A box, to see if there are any questions that are relevant to what we're talking about as we go through the presentation here tonight. All right. Now, everyone's, I think, set so that they can't actually talk. So please use that Q&A box if you can. I prefer if you keep everything in there rather than the chat. But if you're used to using the chat, then don't let that put you off. Just stick a question in there if you have anything. Now, I just want to be very clear about one thing before we kick off. I've noticed that a number of people that have actually registered, and they've got a UK telephone number. Now, I don't know if they're just using that number to register, but they're actually overseas. But I just want to be clear that this presentation is specifically for people that are not currently resident in the UK. So it's not applicable for people that are looking to top up their pension who are living in the UK. So I just want to make that clear before we kick off, so you don't spend the next half hour or so listening to me go through all these slides and figure out that this is not your cup of tea. So that's the first thing. Now, there are also a couple of questions from people about claiming, topping up after retirement age. Now, I don't know whether they mean that they're already retired or they're talking about the retirement age where the state pension kicks in, which is 67 at the moment. It will be going up to 68 in 2026. But if we're referring to somebody who's already claiming their state pension, unfortunately, it's not possible to top up. So that's another thing I just want to clear up before we kick off. So I'll just move on to the agenda. Then I'll give you a short introduction about who we are as a company, who I am as an individual, why I'm talking to you about this. We're going to cover some facts about the state pension and how people become eligible for the state pension first, so that you have this kind of foundation, if you like, of knowledge about what the state pension actually is, because there is some ambiguity about it and a lot of people are not quite sure. This is nothing to do, by the way, with any kind of civil service pension or employee contribution pension scheme that you might have had in the UK. If you need any advice on that, my colleagues at Holborn Assets are qualified to assist you, so please reach out to them. But we're talking specifically about the state pension where that you are eligible for through contributing to national insurance. Okay, so once we've laid the foundation, we're going to be talking about how you check your national insurance record. Now, I've got quite a few people who are attending from my side tonight, and I've invited. Most of you guys have already done that, but for those of you who are not familiar with it, and there are probably a number of people, we'll just quickly tell you how to get into the gov.uk website and check your national insurance record. Once we've done that, I'll talk to you about what voluntary contributions are and which voluntary contributions you'll be eligible for. Now, there are some changes that were due to be coming in on 31st of July. However, last week, the government made an announcement that they are going to defer the 31st of July deadline for a further, basically until April 2025. So there is still plenty of time for people that want to backdate. And even if they want to backdate after that, you can backdate, but you just won't be able to backdate so far. So we'll cover all of this. Now, afterwards, what we obviously need to do to give you the information you need to go away and actually start this process is tell you what steps you need to take. So I'll show you the form that you need to complete, tell you how to complete it, where you need to send it to. So you have hopefully everything you need. But what we will do after the session is a Q&A, just in case there's any other questions that we've not addressed. And we'll also be reaching out to you. So wherever you are based in the world, and I see we've got people from the US right the way across to Southeast Asia on the session tonight. Your local Hoban representative will be in touch with you. And if you've just reached out to us through some sort of marketing campaign that we were running on our social media or something like that, then we will, based on your phone number and your location, we'll assign an advisor to you to get back to you. It may well be me if you're in the Middle East. I'm based here in the UAE. So just to give you a quick introduction about my company, I'm with a firm of financial advisors that are established in 1998. It's Holborn Assets Limited. We're a British family-run firm. We've grown to having over 500 employees around the world. We've got 17 international offices, and we're in 14 different countries. We've currently got 9 international regulatory licenses for providing financial services. So we are highly regulated. We're regulated in the UK under the Financial Conduct Authority. We've also got the European MiFID II license. Okay, so for any of you who need financial planning advice, I know a lot of people that moved to Europe and are living there now, they find it difficult to get advice on their UK investments or UK pensions because they don't have a UK advisor. Well, Holborn have got a license in both places, so we can assist you. We've got offices and licenses in the Middle East and the Far East as well. So over the years, we've got a book of about 20,000 clients that work with Hoban. There is a long list of different services that we provide. It's everything in the sort of wealth management arena and a lot more. So it's very, very exciting. If any of these things are things that you feel, okay, there's something I need to discuss. And I saw in some of the questions that were submitted on the Zoom webinar report that, there are people asking questions about tax and things like that. Well, this is exactly where we can help you, and we can help you to mitigate tax, avoid tax, and put you in a really nice financial position. So that's what Hoban do. Now, just in case, you don't want to take my word for it, there is a third-party ratings company called Trustpilot, and we've just surpassed over 2,000 positive reviews on that portal. So check it out, read some of the reviews, and we're very, very proud of this. We are really, really diligent, and we make sure that we always put our clients' best interest first. Just a little bit about me. I've been 16 years advising clients in the international market. I was working in the UK under in a UK financial services sector before I moved overseas. So I'm familiar with both UK and international, requirements of, for wealth management and financial planning. I've mainly been working in the Middle East. That's where I spent most of my time, predominantly UAE, Saudi Arabia, a bit in Bahrain and Qatar. But I also have a number of clients that have moved overseas and are now living in places like China and Thailand and Malaysia and things like that. So I actually travel out to those locations and service those clients there too. My particular area of specialty is in UK tax and pensions. So the state pension is something that comes up in almost every conversation I have with somebody who's lived or worked in the UK before. And, the state pension is not something to be excited about in terms of it being something you can count on to, live a retirement in luxury and extravagance. But it is something that, is something that everybody should address, I believe. I've just put a list of my certifications and diplomas and things like that. All your Holborn advisors, wherever you might be located in the world, must be qualified and certified in their particular area of expertise. So this is just something to validate what we're doing as being the right way. Okay. Now, that's the initial introduction. Let's crack on to what we're here to discuss. It's the UK state pension. So I just want to discuss a few of the basic facts about the UK state pension. So first of all, What is it? Well, it's not a pension scheme for you. When you pay contributions, what you do is buy yourself an entitlement, and we'll cover the eligibility for that entitlement in the next page. But people who are currently paying national insurance contributions today are paying for the people that are retired today. And it doesn't obviously cover just retirement benefits. It also covers things like your incapacity benefit. It used to be called, I lived in the UK, there's other like job seekers allowance and things like that the national insurance contributions will make you eligible for. So if you're paying national insurance today, that's basically what you're paying. Now, the state pension, the current age is 66. It's going up to 67 from 2026. From 2047, it's going to go up to 68, or it's planned to. It's not officially been announced yet, but that's the intention. Okay, but obviously people are living for longer than they ever have done before, and that they're living a healthy life for longer than they have done before. So the state pension become more and more of a, let's say, a thing that people perhaps would expect to count upon that they might have done in the past, because people's longevity is becoming a lot longer. Now, what is the benefit of the state pension in terms of the actual money that you'll receive? It currently in this tax year is £203.85 per week, or £10,600 per year. So if you get the full state pension, you'll be getting £203 a week. Okay. Now, you can receive your state pension if you retire outside the UK. So if you've got no intention to return to the UK, don't worry about it. Okay. We've got many, many clients, especially here in the Middle East, that, and I work with a lot of doctors that are Indian nationals that worked in the UK and the NHS, have come to the UAE to work and have got no intention of ever returning to the UK, but have accumulated quite a lot of national insurance contributions. If they want to retire in India or anywhere else in the world for that matter, they can still claim a state pension, okay? And they will get it based on whatever contributions they've made. Now, the other point I just want to make is the state pension is linked to the cost of living or the cost of wages. So it will go up every single year, and the minimum increase it will be is 2.5%, even if there's no cost of living increases. But if the cost of living based on the consumer price index is more than 2.5%, it will go up by that percentage. And if wages, the average increase in wages is more than the cost of living, it will go up by whatever the cost of their wages increases. So last year, it actually went up, between last year and this year, by 10.1%. So it's a fairly big hike, this last revision. Okay, now that means, of course, that the contributions also increased by the same percentage. And we'll look at that in a moment. Now, let's assume that you are retiring after 2026, which I think probably the majority of people attending the call will be. Okay, you will fit into basically what is called the new state pension, and you will basically be retiring at the age of 67. In order to get any state pension at all under the new state pension, you must have made a minimum of 10 years of contribution. So if you made 9 years, you're not going to get any state pension. If you made 7 years, you're not going to make any state pension. I mean, it's especially important for people that maybe, they started their early working career in the UK, but they left. They may have maybe only made 4 or 5 years. So basically those people, even if they paid top whack and they were getting a huge deduction in terms of national insurance contributions from their salary under the PAYE system, they're going to lose all of that entitlement unless they do 10 years. Now, assuming you've done more than 10 years, then your entitlement will be based on a prorated amount of years out of 35. So 35 is the maximum number of years you've contributed. And there's an example here. If you've made 20 years of contributions by age 67, for instance, then you would just simply take that 35 years. So you take that annual pension entitlement, and you would divide it by 35 years. And then you'll multiply it by 20, and that will be the state pension you will receive. Now, that's assuming you retire this year. Of course, if you're not going to retire for another 15, 20, 30, 25 years, then this will obviously be a lot more. So bear that in mind. I have put a link here through to the pension centre. We're actually doing this this webinar, in partnership with them, where you can actually click and you can fill out this form and you can forecast your state pension. So just in case that calculation is a little bit taxing for you, which I'm sure it's not, just click on that link and you can go through and you can run the numbers. Now, how do you check your national insurance record? So this is where I was talking about going on the gov.uk website. If you're an expat and you're not aware of checking your national insurance website, not national insurance record on gov.uk site, gov.uk is this unified government gateway system where you can pretty much do like most of the government transactions that you might want to do now. So I recently renewed my driving license through it. You can apply for your kids' passports through it if you're living overseas and they were born overseas. So chances are you have probably interacted with this in the last, I don't know how many years it's been around, but I mean, it must be at least 5 or 6 years. And it's honestly pretty good, as far as government gateway systems go. So I rate it. All I would say is that there's a lot of information and it leads all over the place and you can quite easily end up getting lost. So if that happens to be the case in your situation, then just give us a shout, okay? Now, I have actually put the link to this as well, and anyone who's attending will receive this this slide set in PPTS, so you can go through it. You can have this link; it's already embedded in the presentation, and you can do this yourself, okay? But this goes directly to the place where you need to check your national insurance record. Sorry, let me go back to my slides here. Now, in order to get in, you need to register first. And to register, you need to do some identity verification. Now, we do find that some people have been away from the UK for such a long time that they're not able to pass these identity checks. So they will ask, for instance, like your passport number. They will ask for your driving license number, perhaps, but a lot of people's UK license has expired. They may ask for the postcode or an address that you used to live in the UK. But then they also might ask for something like, who is your mortgage with, for instance, or something like that. So this verification system is linked to the credit bureaus. So anyway, if you can't pass these security checks, that does not stop you in any way from doing this. All it means is you won't be able to log in and see what I'm just about to show you, which is basically this, your national insurance record. Now, if you need to know this before you want to apply to backdate your state pension, you can request for HMRC to give you this information. But I would say you don't really need to know this information because probably you've got a fairly good idea of whether or not you were paying your national insurance after you left the UK. And if you weren't paying your national insurance, well, if you want to go ahead with this, then what's the thing you need to do? You obviously need to pay it. So by completing the application to pay your national insurance, by default, you're going to be receiving a response from HMRC telling you how many years you missed. And then obviously you can opt to repay those years if you choose to. And if you choose not to, that's also your choice and you don't have to. So we'll cover a bit more about doing that in a bit when we talk about how to do the form, but hopefully that's clear. So don't feel that getting access to gov.uk and being able to check your record is make or break for you. And even if you really want to do this, but you literally have not got the time or the inclination to be bothered with it, there are a load of UK chartered accountants and tax advisors that act as a proxy with HMRC. They're registered as agents with them, and for a small, well, I say relatively small fee, you can appoint these guys to just basically do the dirty work for you and come back to you and just tell you what you need to pay and when you need to pay and how you need to pay it. So that's it. And we can pass on details of people if you want us to refer you to them. Now, let's assume you've logged in. So this is giving you a synopsis of your national insurance record. So this particular individual had 12 years worth of full contributions. they've got 26 years to be able to pay before they actually, reach the state pension age. And they've got 14 years where they didn't make enough contributions. So in this particular scenario, look, you've got to make 35 years of contributions in total to be able to get the full state pension. So this particular person's got 26 years to contribute. Okay, they missed 14, they paid 12. Chances are they won't need to backdate the maximum number of years to be able to get to 35 years, because they still have enough years ahead of them to be able to contribute going forward to make up that lost time. So bear in mind, you've only got to get to 35 years. So, yes, you might want to take advantage of backdating, especially if you've left the UK for good. Because, once you've topped up the 35 years, you'll get the full state pension. You never have to worry about it again. We've got a lot of people coming to us that we're doing that for. And, they've got, they've missed 10, 15 years. But once they've paid those 10, 15 years, they'll be up to their 35 years. And that's it then. They can forget about the whole thing until they actually come to claiming the state pension. Okay. But this is to give you an idea of what you're looking at. Now, assuming that then you basically wanted more information, you can click on any one of these years and it shows you that you did not make the full contributions this year, and it tells you how much you need to pay this up for the shortfall. Okay, that is one very, very, very important thing here, and that is that this £824.20 is applicable as a voluntary contribution by default if you were living in the UK, and under certain circumstances if you're living overseas. Okay, but that is not the amount of money that the majority of people have to pay. The majority of people who are living and working overseas as expats can get away with paying far, far less than that. Now, in spite of this fantastic portal where you can go in and log and check your national insurance record, you can check any old pensions you might have lost or whatever, you can't actually top up your state pension through this portal, unfortunately. You have to still do it the normal manual way. So it's a bit of a pain. So we'll come to how you do it in a bit, but that's part of the reason that probably the deadline's been postponed, because there's such a backlog in applications, people trying to do this. Anyway, what my point was here is that ignore what you see in terms of what you need to pay. And even if you try to attempt to go through and pay, you can't. You'll still be directed to go through and do it the manual process. Okay. Now, how to make the contributions if you live and work abroad? Well, there are essentially 4 different classes of national insurance contributions. Which one are you eligible for? Well, it's only class 2 or class 3 that you're going to be eligible for. If you're an expat, you're not eligible for class 1 or class 4. Okay. Now, we're going on in a minute to see how much you need to pay and everything else, but I want to give you an example. So I'm going to load up this site. Now, there are a bunch of these sites knocking around. This one's called the salarycalculator.co.uk. What it enables you to do is stick in a hypothetical salary and check what your national insurance contributions and your tax and everything would be. Or it allows you to calculate what your take-home pay would be in a nutshell. So let's assume that I want to see what my take-home pay would be if I'm earning 50 grand a year. Let's just run this. Okay, so it's telling me that my taxable income after my personal allowance is 37,430. My tax would be 7,486. My national insurance contributions, let's see if I can zoom in on this, in that tax year, okay, assuming I'm earning £50,000 per year, would be £4,491.60. That's what I'd need to pay if I was living in the UK, working in the UK on a fairly modest income nowadays, and getting my tax and my national insurance deducted at source under PAYE. Now, I just want you to remember that figure, because now I'm going to show you what expats can pay. Okay, so if you are working overseas. And that means either being employed or self-employed or a company director. And prior to leaving the UK, you made at least 3 years of qualifying contributions, and you were either employed, self-employed, or registered as unemployed, then you would be eligible for the Class 2 National Insurance contributions. Okay, now this is the absolute bargain of the century, because Class 2 contributions are £163.80 per year, regardless of how much you're earning. So you could be earning, £300,000 a year, and you're only going to pay £163.80 per year in national insurance, and you will get exactly the same 1 year's worth of entitlement as your counterpart, who's earning 50 grand a year and paying 4,400 and whatever it was per year. So that is absolutely unbelievable. Okay, this is why it's a no-brainer for expats to do this. Now, let's assume that unfortunately you don't meet the criteria. You either were not employed, self-employed, or unemployed before you left. That's number one, and you're working now, or you were employed, self-employed, or unemployed, but now you're not working. Well, in that case, you'd have to pay the £824, which is the default option that you saw, which is the Class 3 contributions in the gov.uk portal that's presented to you. Okay, so this is what a lot of people are unaware of. And even myself, it was probably, I've been overseas for 17 years. It probably was not until 7 years of being overseas that this got my attention. Before that, people were saying to me, "Oh, why don't you pay your national insurance contributions? It's a great thing to do. You're not going to lose out on your state pension and things like that." I was like, why the hell would I do that when I could just put that money and save it overseas and not pay any tax on it or whatever? But I didn't realise that I'd only need to pay such a nominal amount of money. And this is the major takeaway from this. Now, just in case you want to validate this, again, I put the link to gov.uk website where you can check. And the part for living and working abroad is here, so you can double check all of this. And even you can follow it through to where you need to complete the application, CF83. So it's all here for you. I've embedded it into the presentation for you as a takeaway. But this is something that even if you've got no intention of backdating your national insurance contributions before this deadline comes into play and they change the rules, that you should be doing. Because if you go back to the UK, you'll be paying an awful lot more for exactly the same entitlement. Hopefully we are all clear so far. I don't see any questions in the box, so please ask them. Perhaps if if there's anything you want to elaborate on or doesn't sound too clear or anything, don't be shy. We've got a lot of people attending, but we can try and address them all at the end of the session. But hopefully that's clear. Now, I just want to make one final point, which you again can check if you check this link, and you can also check the Class 2, Class 3 contributions, and Class 1 and Class 4, and see what entitlements they get you to. But believe it or not, Class 2 contributions buy you entitlement to more benefits than Class 3, even though they're about a fifth of the price. Now, it makes no logical sense to me, but that's what HMRC are offering people. So it's not just an entitlement to the state pension, but there are other benefits there, like your basically your dole money, we used to call it back in the day, and also your incapacity benefit, bereavement benefit, attendance allowance. There's a bunch of stuff on there too. Now, I just want to summarize this to just reiterate the fact that this is the deal of the century. I mean, this is, if you forget Bitcoin and all those other things that people can make money on, this is guaranteed by the British government. Now, let's talk about what the investment is here. If you are eligible for Class 2, you need to pay £163.80 per week. Per year, sorry. So 1 year's entitlement is going to cost you £163.80, £3.15 a week. Now, that 1 year of entitlement will give you £302.86 for life. Okay? So that's every year, and it's index linked, depending on where you live, actually, because there's some countries where the indexing doesn't count, but it's index linked from today until you retire, for sure. So let's assume that you backdate 6 years of 10 years of contributions, and you're paying in a lump sum today of £1,638. Okay, so you've invested £1,638. That will give you £3,028 a year for life. You make your money back in the first year alone. So, you'll be back in the black 1 year within the first year of retirement. And assuming that there were even no cost of living increases, and you lived for 15 years post-retirement, that £1,638 would entitle you to a guaranteed income of over £45,000. So talk about a return on investment. And just think what you would have paid for that if you lived in the UK. Okay, so you'd actually be forking out, let's say let's use our 50 grand a year salary example, 4,400 a year for 4,400 a year for £302 back in return for that 4,400 that you paid in. Okay, so this is the major takeaway, why everyone should do it, and please spread the word. It's just something that's absolute common sense. Now, why do you need to act if you've been outside the UK for a long time and you've not been paying your state pension contributions? Well, there was a rule in force ever since that basically you could not backdate for more than 6 years of contributions. So that would have meant that if you'd have left the UK, let's say 15 years ago, you'd only be able to backdate for the last 6 years, and you would have lost 9 years of entitlement that you could have potentially got. In 2020, they opened up a window temporarily. It was only supposed to last for that tax year, then it was deferred for one further tax year, and it went on, and it was supposed to end in April 2023. So this year was supposed to be the final deadline, but they temporarily opened up this window of opportunity for people to backdate to 2006. Okay, so this meant that, let's say you're now in 2023 and you wanted to, let's say you left the UK in 2006, just for argument's sake, you've got this opportunity to backdate the last 17 years if you want to. Now, you don't have to, because you can backdate basically anything from before the last 6 years, and the last 6 years you can pay as you go, if you like. Okay, but this is, especially for people that are getting on a bit in their life, this is a fantastic opportunity for them to be able to top up and get the full state pension in one hit, and then forget about the whole thing. Okay, now, as it happens, that was extended till the 31st of July. Last week, there was an update, and it's now been extended to the 6th of April 2025. So there's 2 more years to be able to apply. Now, I would say that does not mean you can sort of rest on your laurels and do nothing about this, because we've been helping people spread the word about this and advising our clients about it for well over a year, coming up to the April 2023 deadline. And we have helped hundreds of people submit applications, and the vast majority of them have not even received an acknowledgement from HMRC that they've received their application yet. Now, we have been advised by people that we have working as agents with the HMRC that it doesn't matter about the deadline as long as the application has been received by the HMRC. HMRC do not tell you when they've received it, but if you've got a courier, slip that says that they've been in receipt of it, then that would be your proof that you sent it in. So there is some respite, but having said that, there are tens of thousands of people, you can read the press about this, that have applied. Actually, this range of webinars that that I've been running since last September, October time are the second most widely viewed webinars that Holborn have posted on their YouTube. So this is an incredibly popular thing. And if you try to submit an application now, basically you're just going to be sat on it and waiting. And I would advise you to do it as soon as possible for that reason, because HMRC is taking an extremely long time to respond on this. And the other problem is that they're totally overwhelmed. So if you try to attempt to contact them, you're going to be left with a situation where you might be on a call on hold for an hour plus, just waiting to speak to somebody. So it really is a difficult situation they're faced with. Okay, now I'm going to come to the Q&A in a little bit, and we'll tackle some of the individual questions that people have asked. Okay, but before I do that, I just want to go through how people can actually top up their state pension. Okay, so what you need to do is you need to go to this link, or if you want to go directly to the form, this link. Okay, this link opens up the guidance notes. So you would go here, Social Security Abroad, and all your information is here. Most of it's going to be irrelevant for most people because it's trying to be as comprehensive as possible here. What I would say though is that if you want someone to translate that information into normal, plain English for you, just talk to your financial advisor. Okay, I don't think for the majority of cases that we deal with that the guidance notes are required, because it's really dead simple. How dead simple is it? Well, this is the form. Okay, it's literally a 2-pager. Okay, so the first part is about you, like your marital status, name, date of birth, that sort of thing, national insurance number, obviously. The second part is, when you left the UK, where you live abroad, and that. There's a direct debit mandate in case you want to pay by direct debit. Now, probably you're not going to want to pay £3.15 per week direct debit. So you'll click the box down here for like annual payment. Okay. And you can also click, for instance, if you're self-employed and employed, you click here, class 2. If you have missed national insurance contributions in the past, which probably you would have done if you live overseas, you'd click yes. You want to know about any shortfall here. Okay, and then you put your employment details now, or self-employment details as well. It does ask you if your employer has an address in the UK, or if your employer has an address as well in the UK, as well as overseas. There are some certain workers, like people that work for NATO or UNESCO and these type of sort of governmental entities and NGOs and stuff, where you might need to put some information down here. But that is, just ask us if you have any questions about it. But it's literally dead simple. Now, obviously, you may not have just had a single employer since you left the UK, especially if you left a long, long time ago. So what you need to do when you submit this is just submit a cover letter to tell HMRC and the Department of Work and Pensions where you were living and who you were working with, or if you're self-employed, what you were doing during that period. And usually that's enough. In some cases, they might ask to evidence it, which is fine if you have evidence. But usually just a cover letter explaining that employment history when you were overseas is enough. Some people submit it with their CVs and things like that. So that's pretty much it. Now, if you need help doing that, then we are on hand to do that. And I've given everybody who I work with the option to just basically send me a WhatsApp with a screenshot of the form once they've done it, and I'll just help them check and make sure it's done properly before they send it off. There's one final point to note, and that is that this address that is highlighted on this form here is actually not the address for HMRC to receive courier courier applications from overseas. So this is the correct address. So ignore the address that's on the CF83 form for the purposes of you submitting this application. Now, once it's in and you've got your confirmation from your courier that HMR have received it, then you'll just have to sit and wait, unfortunately. But once that wait is over, HMRC are going to be writing to you, and they're going to be telling you about any shortfall you've got, asking you if you want to pay it, and issuing you with a number, like a unique number, that you will use when you make your payment as the payment reference, so that they can assign that to your actual your state pension your national insurance contributions. So you cannot pay unless you've got that number. The only other way around this is you can actually make voluntary contributions if you're registered and you're paying self-assessment. So you can do that as part of your self-assessment process. If you have an accountant who's working with you in the UK that's doing that for you, they can easily take care of that for you. If you want us to recommend an accountant or a tax advisor that's based in the UK to do this, we'd be very happy to do so, and we could just give you some advice as well on a one-to-one basis exactly how that's done. Okay, so there is another question that I will tackle in a moment, but this has got nothing whatsoever to do with your tax residency status. So do not feel in any way that if you're applying to pay your national insurance contributions, you're somehow going to tie yourself into paying UK tax on your worldwide income. That's only going to be the case if you're UK tax resident or on death on your estate under the UK inheritance tax rules, if you're domiciled in the UK, or deemed domiciled if you lived in the UK for a certain number of years. So again, if you want any tax advice, that's what I'm here for. That's what my colleagues are here for. We'd love to help you with that. We can help you plan for these things. Okay, but this has got nothing whatsoever to do with anything to do with you paying tax. Apart from the fact that if you want to, you can pay it through your self-assessment if you're already paying self-assessment. Now, just before we wrap up and do Q&A, there's one thing I want to touch on, because I've been discussing national insurance with loads and loads of people ever since, and I'm a pensions and financial planning specialist. And one thing I find with so many people when I'm meeting with them, especially people that have been quite new in the UAE and they've not fully established themselves where they are, is that pretty much by and large they've not just forgot about paying their national insurance contributions, they haven't paid any type of retirement contributions whatsoever. And what people find as the years goes on is that actually all the people that they were working with and were friends with and family and that they've got back in the UK end up with bigger retirement pots than people that moved overseas and were living the expat lifestyle and getting amazing tax-free income and everything else. So do not let that be you. And if it is you, then you've got to do something about this, because you are losing out on planning for your retirement. And retirement is probably the biggest financial commitment that anyone will ever have in their lifetime, because retirement is a situation where you've got to have a residual income coming in that will fund your living costs. Okay, and it could be indefinitely. And I don't know anyone personally who I've met who's told me that I plan to die young and I'm not going to retire. Okay, I do meet a lot of people when I'm doing financial planning meetings that tell me I'm going to work forever, but the reality is that people don't work forever. Okay, there's always something that prevents them from doing it. People think, okay, well, I'm healthy, I'm fit, I'm not going to get any illness or incapacity or anything. That might be the case, but most people in their careers, especially their expat careers, they hit some sort of plateau at some point, and they end up in a situation where they've lost their job. They had a really good job. They end up looking for other work. They can't, at their age, get back into a job that was as senior level as what they had before. They become a little bit obsolete, if you like. They try it maybe for a few years, but they end up, wanting to leave, and they want to start looking at other things. Okay, so retirement is something that if you have and you've planned for, is something that you can count on in the future to be able to, when you decide that you want to start working, you've got that freedom. And there's nothing like it, trust me. Okay, now just in case you want to understand what it's like the cost of living, I've put here the Office of National Statistics spending calculator. So this actually is like a tool. It's interactive. where you can check out, the average cost of living in the UK. Now there's loads of sites, by the way, where you can check how much the average cost of living is in Spain and, wherever you might be. So it's all there, public information available on the internet these days. But people, find these tools useful. And I've also put here a cost of living calculator that links through to the pension centre, where you can, you probably need about 10, 15 minutes to do this because it's very comprehensive. But what it does is come back with a very detailed, basically it's a very thorough way to plan your living expenses, and you can use that today. Actually, I highly recommend anyone do this as an exercise, because a lot of people are spending money and they've got all these subscriptions and memberships, and they're doing this and doing that, and they don't factor in gifts, and they spend a lot more money than they actually anticipate. So when you have such a comprehensive tool to do that, this is very useful. There's also a retirement calculator embedded, so actually you can plug in the information that you get coming out of that cost of living calculator. So you can assume that you're already retired, for instance, and let's say you're living in Austria, wherever you want to live. Put your cost of livings in there and then calculate based on how many years you've got to retirement and assumed rates of return on in your pension and investments and things that you've already got. You can work out whether or not you're falling short. So I'd highly recommend you use these tools. Now I'm going to go over to Q&A now. We got some questions that people have put in the Q&A box. Thank you very much for these. So let me just go through and address some of these. So we'll go through it one by one. Now, there was a question about tax, and hopefully I've addressed that. So thanks very much for that. Okay, so there's a question from Luke, who's asking, regarding the contributions, is it better to backdate or use the time remaining and pay going forward? Luke's only 42, and he's got about 20 years of contributions. Well, Luke, this is entirely up to you. If you don't backdate, you will need to factor in the situation that the annual contribution will increase each year as you go forward, but it will only increase by cost of living increases. So it's not going to go up through the roof. So, for instance, this went up from this year from £3.15 a week to £3.45 a week. Okay, so there's that thing that will be detrimental to you. If you've got absolutely no plans whatsoever to return to the UK in your working life, let's say, it does make sense, if you've got the money, to just take care of it in one go, and then it's done and dusted, and it's done at today's rates, not future rates. So there is an argument that you could say for that. If you think that you might go back to the UK and work in the future, well, you're going to be forced to pay national insurance under PAYE. So let's say you're Luke and you've paid 20 years of contributions and you need 15 to get to 35 years, and you're 42. Well, if at 43 you go back to the UK and you can retire at 67, you've got years ahead of you. You've got basically 24 years where you're going to be, if you're working in that period, you're going to be taxed anyway. So it doesn't make sense to backdate. Yeah, I would say that the case for backdate is based on whether or not you plan to return in the near future. Many people in this part of the world that I meet now, they plan to stay indefinitely as an expat. So if that's you, then this could be useful. And also people that are near retirement that have got big gaps in employment. So hopefully that's explained that one. Okay. Now, there's a question about how the HMRC will correspond with you. On the CF83 form, it's asking if you want to give a UK address. If you've got a UK address, nothing like it, even if it's not your own address. So let's say it's your sister's address, friend's address or whatever, you can stick that down, because the HMRC are going to use the old Royal Mail to correspond with you. They're not going to send it by courier to an overseas address. If you live where I live in the UAE, you will know, and this is the same for Saudi and Qatar and everything else, that probably mail will stand a very high chance of ever reaching you if it's sent by normal post. So everyone uses couriers. So I would strongly recommend you use a UK address. If you've got no one's address that you can use and you can spare £300, and again, this is if you don't want the hassle of doing this whole thing, I would recommend you appoint a UK chartered accountant who's got agency with HMRC just to do the whole thing for you. And they'll liaise with HMRC right up to the point where you need to pay, and then tell you how much you need to pay, where you need to send the money, and then job done. So I would, I would suggest that, and also that's for people that they're having trouble accessing gov.uk website, or they can't remember the national insurance number, or whatever it might be. Those are situations where it's worthwhile having a proxy, or even if you just can't be bothered to waste your time on it, and you just prefer someone else to take care of it for you. Because a lot of people, given the fact that it's such a small amount of money to pay for such a big benefit, think that 300, 400, 500 quid for a professional to do it for them is nothing. Okay. Now, another quick question here is, you lived outside the UK for 25 years, worked for 4 or 5 years before leaving. Okay. I was just given a UK employment contract. Can I still pay the £163 for the years while I was outside of the UK, please? No, you've got to be living outside of the UK. So look, actually, that's not quite true. If you've just got this contract, but you've not actually started work and you're not living in the UK at the moment, you're still living in the UAE or Spain or wherever you might be living, then the answer is yes. You better get in there really, really, really quick though, and submit your application. Okay. If, however, you've already taken up that contract and you've gone back to the UK and you're working, the answer is going to be no, because you would be basically deemed UK resident as soon as you start UK employment again, as long if it's a full-time employment over a certain number of hours. I mean, again, anyone wants any advice about whether or not they think they're a UK resident for tax purposes, just give us a shout. We can go through your what we call a statutory residency test for you, and we can explain. But you would have missed the boat there, unfortunately. Now, there is another question about clarifying about where to send the CF83 form. The answer is ignore the address on the CF83 form. It's not for couriers. So there is a separate National Insurance Department address, which is in the presentation. I'll share with my colleagues as well to share with you, where you can courier it to, and it's dedicated for receiving courier mail. So that is the address that I showed you on the presentation. It is different. I'm not saying that if you sent it to the first address that HMRC would reject it or something, or it would never get processed, but it would just, I believe, slow down the whole process. This was actually, I've been working with people, helping them do this for a long, long time. It was only, I think, in January, February time that someone brought my attention to the fact that they have a separate courier address. So everyone who applied before didn't seem to have too much of a problem getting their mail delivered to the address on the CF83, but I would say that HMRC would prefer you to send it to the other address. And it's on their website too, so you can find that on the links that are embedded into the presentation. Okay. Now there's a question about what happens if I die. Can my wife get my state pension? The answer is no, unfortunately. You can't leave your state pension to anybody. Okay. It goes when you go, unfortunately. So that's okay. What else? If we already have sent the okay, so there's another question about whether or not someone's already sent the CF83 form off. Do they need to send it again? I would say potentially, if you feel that maybe there's a risk that it might have not been received. This is why I would strongly recommend you send it using a courier. It's probably worth it. But hopefully, if it's been received, there would not be any reason to send it again if you happen to send it to the wrong address there. Okay, so hopefully that makes sense. But unless you sent it by courier, you might not know if someone's received that. sorry, if it's been received at the other end or not. But now that the deadline's been extended till April 2025, I hope that the HMRC can clear this backlog and start getting on top of things and be able to respond to people's inquiries about whether they've received their form and things in a timely fashion. I have multiple horror stories that I've heard recently. You know, there's people that they're already retired. They can't reach the HMRC to inform them that they've changed their bank account and their old account's been closed and they're not receiving their state pension, even though they are supposed to be getting it, and they're not able to reach MRC to find out why. That's one, because a lot of Brits, when they leave the UK, over the last few years, UK banks have been doing enhanced due diligence on people that are living overseas, and they're asking people to come forward with certain documents or even visit the branch. I've had it myself with Santander. I had to physically visit the branch to do some checks when I visited the UK. Some people can't do this; their accounts are closed, basically. So this is creating a headache. There's also people that actually are retiring this year that wanted to backdate before they retire, because after you retired, remember I mentioned at the beginning of the call, if you've retired already, you can't backdate. Well, what if you're retiring this year, you want to backdate, you've applied to backdate, but HMRC have not given you this code, this identifier, for you to be able to make your payment, and you can't reach them to find out why. So that's another popular thing. So, you know, bear in mind that there's all sorts of these sort of issues that the HMRC are facing right now from all, you know, tens of thousands of people, you know, in the UK and all over the world because of this. So hopefully they will get on top of things soon. Now, I believe that there are a number of other questions here, but I think that we've covered them in the presentation. I think that everything's being covered. Has anybody got any final questions? Okay, so question about whether to pay, someone can pay from an overseas account. I've received from one of my colleagues here. Yeah, no problem. If you just, you know, you can pay it from anywhere you want. And by the way, you can receive your state pension anywhere you want. So this is not an issue. You don't have a problem, but obviously I would suggest that if you're paying you know, these ad hoc payments on an annual basis, that, you know, you just set yourself some sort of recurring reminder, like a birthday, you know, notification to you remind yourself to do the payment, and just check each year what it would be. If there's nothing else, I think we'll call it a day. I hope you found it useful. You'll be getting all of the details and the slides and everything, I believe, from whoever invited you to the session. And if you invited yourself because you were following us on our social media and you saw the ad come up for this, you know, someone from our marketing team will get in touch with you. And feel free, of course, to reach out to me. I'm very happy to assist you. And do spread the word about this. I believe that any expat should be contributing while they're overseas, whether or not they backdate. It's such a low-cost thing to do, and it buys you such a good level of entitlement. So, you know, share the word. There's so many people that don't know about this, or like me, they were just naive to how much you had to pay. Yeah, like that's pretty much it. So I guess we'll wrap up for the day. But thanks so much for attending, and I'll look forward to hearing from you guys in the future at some point, I hope. Take care.